Hi, I'm Pat Keon, a Senior Research Analyst with Lipper. I'm here to speak to you about fund flows activity for the week ended Wednesday, March 11th. We'll start this week's report by taking a look at the market activity for the week. Continued coronavirus fears plus a burgeoning price war in the oil industry sent the markets careening into bear market territory during a volatile week of trading. The Dow Jones Industrial Average, the S&P 500 Index, and the NASDAQ Composite Index closed the fund flows trading week down 13.1%, 12.4%, and 11.8% respectively. The losses pushed the NASDAQ and Dow into bear territory as they closed down 23.5% and 20.3% from their mid-February highs, while the S&P 500 seemed poised to follow suit as they're down about 19% since their recent peak. These results ended the 11-year bull market run. On Monday, March 9th, the start of an oil price war exacerbated what was already a bad week of trading. The price dispute emanated from a spat between OPEC and Russia and sent the price for Brent crude, which is the global benchmark for oil prices, spiraling downward 24.1% on March 9th, its worst one-day decline since the 1991 Gulf War. Brent crude is off 39.7% since its recent high of $59.31 on February 20th. Adding the upheaval in the oil prices on top of the coronavirus crisis resulted in all the equity indices being down more than 7% in trading on the 9th, and the New York Stock Exchange Level 1 circuit breaker being triggered for the first time since its rules were revised in 2013. The Level 1 circuit breaker results in a 15-minute halt in trading and occurs when the S&P 500 index is down at least 7% from its previous day's close. Oil prices and U.S. government bond yields are viewed as key indicators in respect to the strength of the economy. In conjunction with the equity markets tanking, the yield on the U.S. 10-year Treasury note has given up 70 basis points over the last 3 weeks, retreating from 1.33% to 0.86%. This has caused recession fears to surface again. Things appeared to stabilize the following day on the 10th as oil prices bounced back almost 10%. The yield on the 10-year note was up 25 basis points, and all three of the aforementioned equity indices recorded gains in the neighborhood of 5%. This positive sentiment did not last long, as it went by the wayside the next day as the World Health Organization officially declared the coronavirus a global pandemic and criticized the governmental efforts to combat its spread. While on the home front, Dr. Anthony Fauci, director of the National Institute of Allergy and Infectious Diseases, stated in testimony before Congress that things will get worse in respect to the coronavirus in the U.S. This double barrel of negativity caused the equity markets to give back the previous day's gains and cross the bear market threshold. Well, after all that, let's turn our attention back now to the fund flows activity for this week. We'll start by taking a look at our fund macro results. For the week, money market funds took in $87.6 billion in net new money. This is a record net inflow for the asset group. All the other asset groups saw money leave as taxable bond funds, equity funds, and muni bond funds had net outflows of $11.9 billion, $3.2 billion, and $1.7 billion respectively. We'll take a look at the changes in all these asset groups a little more closely now. We'll start with the equity mutual fund group. The $3.2 billion weekly net outflow for this group was its 11th straight net outflow. Both domestic and non-domestic equity funds contributed to the negative net flows. Domestic equity saw $2.2 billion leave, while non-domestic equity had just shy of $1 billion in net outflows. Among the peer groups, on the side, large cap growth funds had the largest net outflow at $1.5 billion, while for non-domestic, we saw just about $500 million leave the international multi-cap core funds peer group. We'll move on to equity ETFs now. Net outflows here again last week saw $1.1 billion leave. The two hardest hit equity ETFs were the SPDR S&P 500 and the Financial Select Sector SPDR, which had net outflows of $1.9 and $1.5 billion respectively. Conversely, the iShares Core S&P 500 ETF took in just about $1.1 billion of net new money. On to our taxable bond fund groups now. We'll start with mutual funds. Taxable bond mutual funds had their second straight weekly net outflow. They had $11.9 billion leave. The lion's share of the taxable bond peer groups had assets leave. with the core bond funds group, high yield funds, and loan participation funds shedding the most net assets at $2.3 billion, $2.2 billion, and $1.8 billion respectively. We'll move on to taxable bond ETFs now. This group also had net outflows last week, $727 million left the group. In response to the yields dropping, Treasury products attracted the most net new money amongst taxable bond ETFs, led by the iShares 1 to 3 year Treasury bond ETF and the iShares short Treasury bond ETF, which grew their coffers by $2.4 billion and $1.6 billion respectively. The largest net outflow belonged to the iShares core U.S. bond ETF at just about $886 million. We'll move on now to the Muni Bond Fund Group, which after 60 straight net inflows had their second straight net outflow last week. This asset group had negative net flows of $1.7 billion for the week. This was driven by record high net outflows of $1.6 billion from the high yield muni debt funds. Our last group to look at is money market funds. As we said earlier, money market funds are responsible for all the week's net inflows as investors parked a significant amount of money on the sidelines driven by the uncertainty surrounding the coronavirus pandemic. This week's record-setting net inflow of $87.6 billion bested the group's previous record high of $81.2 billion for the fund flows week of December 12, 2018. This week's positive net flows were driven by the institutional U.S. government money market funds and the institutional U.S. Treasury money market funds peer groups, which took in $55.7 billion and $29.2 billion of net new money. Well, that wraps up this report. If you'd like to take a closer look at the data for yourself, please go to our website. It's at www.lipperusfundflows.com. And please join us here again next week where another one of our analysts will be speaking about that week's fund flows activity.